Welcome back to Making Money Matter, ladies and gentlemen. Today I have asked Peter Grandich to join me once again. If you remember, last time we spoke was in August of last year. Peter is a very well-known financial commentator. He wrote the book, which I love, Confessions, and I got this wrong last time. I got it right this time. Confessions of a Former or a Wall Street Whiz Kid. And he's done extra chapters in it, because I think you've done 5 additions to the book, which is amazing. So he keeps adding to it. Plus, ladies and gentlemen, you can go to his website and download it for free. And I'm telling you, it's well worth a read in these crazy times that we find ourselves in, which is, last time I spoke to Peter, there was chaos in the markets a little bit. I still find myself scratching my head, not knowing where to go. But as I speak to Peter in April of 24, the gold price is hitting all-time highs. Silver is not as strong, but getting stronger. And there's a lot to talk about today. So welcome back, Peter. Great to see you.
Great to see you, obviously. I told you the last time when you interviewed me, it was my first time to be interviewed in Australia. And to my niece and son, my niece and nephew there, that hopefully you'll be tuning in, hello. And I still have it on my bucket list to get there.
Well, come out for the gold conference in August. There you go. We'll put it out to your nieces and nephew to get you out here. But one of the things that I think is also interesting about you, you joined Wall Street, I think it was the mid-'80s. Is that correct?
Yes.
Ladies and gentlemen, here's the thing. Peter joined Wall Street in the mid-'80s without any formal qualifications, but he rose right up to become fairly senior on Wall Street. You had many decades of experience there. And now you're trying to help people understand what's going on. So let's just start. We'll get into gold in a minute and silver. But let's just start. We're talking in 24. There's an election coming up. It feels to me like there's a lot of unrest in the world. I'd just like your big picture thoughts at the moment before we dive a little bit deeper.
So, Kerry, since we last spoke, I took the most serious and defensive position I ever did in my 40 years. I a few weeks back wrote an article that was basically headed, "It's time to build an ark," because we have 5 very serious problems here in the US, and they overrun into other areas of the world. But here in the US, the first and foremost, it's been talked about, but now it's become so acute, and it's gone past the point of no return, and that's our debt issue. And the reason it's gone past our point of no return is because they've accelerated so much the deficits now. Now they're $2, $3, $4 trillion a year, and we don't have the growth to match that possibly people can earn enough discretionary income to pay the interest. Think about it. It took 37 years to go the same amount of debt that this administration has just done in 3 years. Now you can say it's partly Congress's fault as well, and there's Republicans involved in that. But it's exponentially growing to the point where, and I'm certain the news has made it to Australia as well, some big Wall Street titans and big industrial titans really starting to speak about the problem of the debt now. So that's the first one. It's been probably the most talked about one, but it's really become acute. The second one is a combination of a retirement and an aging crisis. Here in America, 65% of the Americans are working paycheck to paycheck. So by the way, they're not going to earn any money to help pay down that debt or even the interest. They can barely get by now.
Can you just say that number again? Did you say 65?
65%.
That's
65. Yeah. And it's been a while that way. And if you think about it, they're working paycheck to paycheck. So not only does the bump up in inflation and lack of wage growth hurt them, but they are not going to see that dream that my so-called peers on Wall Street sell about work hard and then come with us and you live happily ever after in your last part of your life. They're going to keep struggling way past 65. And that also sets up an aging crisis, and not so much aging because of not being able to retire, but as the boomers peak, and we're in that peak level now, and unfortunately, there'll be less and less of us, and there'll be more and more younger people. As this crisis goes higher and the government keeps raising taxes and cutting services, eventually some younger person is going to say, I really don't think I should be paying all this money into Social Security, which I'm probably never going to collect. Medicare, which is probably not going to be around for me, and some 88-year-old Grandich wants some lung transplant that's going to cost a few $100,000, and I can't even pay for gas. So there's going to become a battle of the ages down the road in this crisis. The third one is something that is all around the world, but it's become acute here in the U.S., and that's an immigration crisis. I'm not here to dispute good people or bad people coming across the border, what their intentions are, whatever. But I will say this, most of those people coming, good or bad, are coming just with the shirts on their back. Now, they have left a dire situation where no really American could say, yeah, I could send them back there. I could live in that condition. They left because they were very poor or where they lived was very tough, and they're trying to find a better life. And they come here now and they're actually receiving benefits that American citizens can't get.
Oh,
And
really?
so, oh yeah,
Like
that's
what?
the big problem. Oh, well, how about paid rent for 2, 3 years? How about debit cards of 1,000 to 1,500 a month? It's preposterous, actually, what it's come to. And so you cannot blame them for not only wanting to stay, but they're going to call everybody or contact everybody they know back where they came from, says, you got to get here too. So even if we build a wall, I think they're going to climb over the wall to have something like that. So that's an economic invasion as far as I'm concerned, but it will lead to strife because what's happening here in the States right now may not make your news yet, but it's happening quite often. The less fortunate who are now seeing what would have at least come to them is going to the immigrants, they're kicking up because they feel what little they get is now going to people that, haven't paid the prices they paid. The fourth one is the one that Wall Street still doesn't get, and it's going to kick them in the rear hard when they realize a few years down the road how badly they missed it. And that's the continuation formation of the BRIC nations. And what I try to tell Americans here is even if it's not all cut up to be what some of us think, like I do, that it's going to compete to the point where it's going to compete to what the Industrial Revolution was to world trade, so will be BRICS. But even if it's only half of that, what Americans fail to understand and appreciate, that's all business that used to be done with the U.S. and now will be purposely not done with the U.S. So there's no way that's beneficial to America. And then the fifth one is the one that you would hope that could help fix the other four, and it's broken the most, and that's political paralysis. We have two parties here that not only can't go a room and do anything doable, but now both parties have increasing factions within them that are splintering. In the left, going more left, and in the right, going more right. And that's the group that's going to be called upon as these issues grow and mature and become more recognized and more day to day. And they're in the worst possible position since I've been in the business to construct and do anything worthwhile that could be solved. So with all of that, forgetting, and we can get to gold now, but with all of that, I developed a principle that we got to think about like Noah did. We got to build an ark. It's going to be up at times here, at least in the U.S. And therefore, we need to do certain things and recognize that not that this is going to happen tomorrow, but I think it's within a fairly reasonable time that most people who will hear this will live to see it. And what I find in our planning group here, when I sit with Americans, still 7 out of 10 families, maybe as many as 8 out of 10, from day-to-day people to the athletes that I dealt with, they're all living at least one or two lifestyles above where their finances support. And when you tell them the best advice that was ever given to me, which is less is more, they look at you. But how am I going to do this? But what is this going to happen? And, have a lesser car, maybe a smaller home, maybe not go out as much. And they have taken away from the future. And we see it all the time in our economic numbers. Our personal income goes up 0.3%. Our personal spending goes up 0.6. And I tell everybody, if you spend 6, but you only make 3, you have to get the $3 from somewhere else. And we take it from borrowing from our future. So they haven't put away for savings. They struggle with kids' colleges. They continue to borrow. And now the perplexing is the bottom half of America's income is being the most hardest hit by this. But now we're seeing the upper echelon of middle class struggling and faltering. And now the Fed is in a quagmire because it can't let interest rates go much higher or stay high for too long because of this burdening debt. But it also has issues with inflation that it can't fix, because everybody doesn't realize once the genie gets out of the inflation bottle, she doesn't like going back in. And
No.
everybody just thought, okay, they'll tighten, they'll hold back, it'll be back, we'll be back to 2% rates and 2% inflation. And so we're going to just continue to go down tougher and tougher roads. And I just think it's time for people to err. My philosophy is it's better to be a live chicken than a dead duck.
Okay. That was a lot of information, most of it quite depressing. My first question to you is you said it's time to build an ark. Expand on that for us and explain what you mean. How do you build the ark? We know about Noah, but how are we building our own arks?
Well, first of all, Noah, when he was building his ark, I'm sure was being laughed at. Hey, Noah, what are you doing that for? It's sunny, it's 80 degrees. What are you bothering with that? You know, but in the end, it was a smart thing to do. Right now, a lot of people think, it can't get that bad and all. And, I kind of hope maybe I'm wrong. The worst case is building an ark. And building an ark is a few things here. One, people have to recognize whether you're spiritually inclined or not, whether you believe the Bible was a word of God or just some historical book that some people wrote that a lot of people happen to read and listen to. But one of the things it harps about all across in the Old and New Testament is debt is a four-letter word, and there's nothing good about it. And if you look around the world, not just in the United States, we continue to see more and more indebtedness at levels compared to GDP and all, is really setting up a lot of countries, not just the United States, for some very, very harsh times. So the first thing I always tell people, and just so you know, when I start this talk in our planning group, people are already looking for the exit. I don't get to the end of my talk before most people want to leave, but that's okay. I still share it. So the first thing is the big picture is less is more. Listen, it doesn't really matter where you live in the world. Chances are our parents and grandparents lived with less. They didn't have as big as homes. They
Yep.
didn't have as fancy cars. They didn't have all the gadgets and everything. And yet every medical psychological study, Kerry, tells us that this generation now is more of a mess than any other past generation. So all that stuff didn't add up to all the things we were led to believe, the happiness and all that would come from it. So that's that less is more attitude that I think we have to have. We have to reduce debt and recognize this. Governments, whether they're in Australia or Asia or Europe or the United States, only have two choices. They can raise taxes, because that's how they raise their funds, and cut services. And governments are going to have to do both.
Yeah.
And so that's going to mean leaner and tougher times. And the better shape you're in, not to be as dependent on government as maybe the neighbor will be, the likely better off you'll be. And what I always say is, let's just say I'm completely wrong. Great times return again. Life becomes like it used to be years ago and so forth. What's the worst thing that happened to you? You're still fine and you're still okay. And but I think if I'm half right, I think there's a lot of people very vulnerable to, listen, the number one thing that kills us health-wise is stress. And
Absolutely.
one thing I believe this plan does, it lowers stress levels. So if nothing else, and I'm not claiming I'm a doctor, but I think it's a good idea, given everything that we're seeing, to make life a little bit more simpler, even though that box we watch or the computer we read into tells us that all these wonderful things can be yours if you just do this, that, and the other. I think we need to push back from that care.
By pushing back, you mean make life simpler. Don't have. I talk about this quite often, Peter, where I say we're in a society now, which is what I call the tap-taparoo society. In other words, the credit cards came in a number of decades ago. People started living on credit. People started wanting I want it now. They weren't prepared to wait. Like back in my parents' age, they waited till they had the funds to be able to purchase, whether it was a car or a house or whatever. What we do is we live off credit, and people tap everything away without any understanding of the consequences of getting into so much debt. So back to your premise of less is more and building that arc, is it as simple as that? Less is like get rid of some of your streaming services, be aware of where you're tapping your money away? Is it as simple as that?
Well, for the person just getting by, yeah, every penny counts. One of the things I always counsel people is for 30, 60, or 90 days, including every member of the family, write down every
Yeah.
day what you spend money on. People are just shocked when they find out, especially when the sibling or you find out what the children are spending, or the children find out what mom and dad is spending. And
Yeah.
before you know it, a couple of hundred, dollars or whatever the currency people may be looking at is saved. I think the other thing that's very, very important is to understand that you don't have to completely reverse. You just may have to do less than you've done up to. You have to ask yourself, everybody has different faiths and nationalities and so forth. But one of the commonalities when you look back a generation or two, wherever you look in the world, people worked more and it didn't take as much to feel it to make them happy. And we've have a society now, especially thanks to all this internet and things that have come, where kids are, we spent most of our days outside inventing games,
Yeah.
whatever exists. Now everything is based on what somebody's pre-programming and telling them what they think should know what is good and all. And they've lost their inventivity, but they've also become more expensive to enjoy their childhood than what we've done and all. And I think as parents, and it's tough because once the children start a certain way, but I just think you have to remind them that at one time we used to have just one of everything, one car, one TV, 1 month, 1 day out, not 5 nights out. And that's for people struggling. But when people that have been blessed with more capital, where they suffer a lot and don't realize it, and this is the type of planning we do, and it works anywhere in the world. Most people have what's called an LOC, a lost opportunity cost. They're not managing cash flow productively. It doesn't matter what business you're in or where in the world. You show me a successful Australian business person, and they'll probably show me that they were successful by managing their cash flow properly. And so how efficient you are with cash flow is very, very important. And a lot of people are inefficient. In other words, you could have a store and wow, I'm doing $5,000 in sales a day, but not realizing $500 is going out the back door, $200 because you got employees that don't handle stuff, so they damage goods that you can't return, et cetera, et cetera. So efficiency on how you handle capital is another thing now to look at, especially now if things are going to get tougher, because the more efficient you can be what you have, the more obviously you can enjoy what you have.
You mentioned just, and by the way, all of that is, I tick, 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 completely agree. Start to wake up people and understand where your hard-earned currency is going. I don't call it money. Gold is money. Everything else is credit, in my opinion. But given the fact that 65% of Americans are living paycheck to paycheck, I hate to think what it is down here. We have an enormous issue down here, Peter, with the property market is on fire. There's a lot of homelessness. There's a lot of people. Rents are going through the roof. So people are finding it really, really tough at the moment. So I'm sure we've got something similar. Do you think governments could be looking at something like a universal basic income and just go, you know what, we're just going to bring that in and we'll make it easy, and that's across the board?
Yeah, it is something that's out there. It is one of the longer term prospects that could happen after all of this. What I don't think we know yet is we don't know, first of all, this division that I think the BRICS are going to lead to. I really think it's going to be a major, major issue in a few years that it's going to be substantial, and it's going to rival because it's going to impact the dollar. The dollar is still the world reserve currency, even though that's dissipating.
Yeah.
And the United States is just in no shape whatsoever to begin to appreciate no longer being the big kid on the block, so to speak, economically, socially, politically, et cetera, et cetera. And that doesn't count on whatever happens in our political election, which in itself, to this moment, I'm not still certain that one or both of these people will be the person on election day, because one is, I think, getting very ill and getting to the point where I think you have to give strong consideration. How could you think about him going another 4 years? And I
Absolutely.
believe there's so much hate against another person that even if he wins, if you think what's been done, and I'm not here to judge whether it was right or wrong, I'm just dealing with what looks like is
Yep.
facts. Certain people concur that this man has done such evil that they have taken such steps to stop him from going forward, justifiable or not. What I say to the people that support him is, why do you think, even if you get him elected, that they're just going to say, okay, we lost, let's go on with life? I think it's going to infuriate them even more. I
Yeah.
think it's even more troublesome for him to move forward, given what has been done against him. So there's no rightful answer for us politically here. So I just think, even though we'll put off some things, thinking somehow if our guy wins, things will be better for us. But I
Mhm.
think soon after the election, we're going to be that much worse off, and things are going to be tough. So that's why I say I think people have a few months. They may even have a year, but I think somewhere within most of our lifetimes, 3 years, I used a 3 to 5 year, Kerry, saying that I may be earlier or maybe a year later, but most people are going to be around for that. And I just don't see any way of avoiding this much more difficult period economically, socially, and politically. And you're right, governments may take that choice. The other thing that's unknown is all this talk, and apparently it's coming close to coming out. What is digital currencies going to do to us?
Yes.
Is
Yeah.
that going to How's that going to impact us and all? And I'm not talking about Bitcoin. I'm talking about just governments deciding to use digital currencies. And so there's a lot on the table. And here in the States, I can't speak for your country, Kerry, but most people and most advisors that I meet, they have no real understanding of the ramifications of this. They grew up in a generation of working in an industry where, other than a couple fast and sharp corrections compared to what it basically did, stocks and bonds always went up. It's only been the last couple of years where they started to move sideways or down. I
Mm.
don't know if the financial service industry is prepared or able to know what to do properly for people if this party doesn't keep continuing. Because remember, it's always been the Fed to the rescue, the Fed to the rescue.
Yeah. Yeah.
And now I think people would be concerned that if they open the floodgates again, giving now people starting to recognize the terrible amount of deficits and debt we had, that could actually go against them. And that's what I think they're afraid to do. That's why I think they've been hesitant to cut rates. That's just my opinion and all. So there's no easy answer. And I don't think they have a right answer. I think they lose or they lose. And it's probably going to come down to what they view as a lesser of two evils will be the decision making. And I don't suspect them to make any real hard decisions on that until they see what the election results are. Because we're going to move in two different directions depending on who wins. We're either going to have more of the same, or we're
Yeah.
going to have somebody that wants something radically different.
I think we live in very interesting times, and I want to bring up real money if we could, because we're talking about building the arc. We're talking about stocks and bonds and central bank digital currencies. Currencies are currencies, money is money. I always say gold is money, everything else is credit. You tweeted, and I'd like to quote from this tweet because I think it's important. It's something that you put a tweet out today about, which you said, as stated earlier, having been an enormous gold bull from around $1,200 and then banging the table in late 2022 when it was around 1650, and most of the forecasts were it was going to decline from there. You think what you said was, I think 2350 in US dollars, less than 2 years later, is a good time to take some profits. You astound me, Peter. I thought what you did with gold is you don't take the profits, you hold until you absolutely need to look after yourself, I guess. But it's a way of preserving your wealth going forward. Why would you sell unless you truly had to?
Well, when I say sell, we're not liquidating anything close to our entire position. You have to also understand that back in at the end of 2021, I said to people that I loved gold so much that I was willing to sell all stocks except those related to natural resources and all bonds, because I
Wow.
felt from 2022 through 2024, gold would outperform them both, which it has.
Yeah.
Believe it or not, if you go look at January 1st, 2022, look at the Dow, NASDAQ, and S&P and the 10-year bond or 30-year bond, and go to today's price, gold outperformed them all. what I felt now is since we've had that, and that was for the capital appreciation part of my business, take some profits off of that. For those that own gold for the preservation, for the ARC, still going to go much higher, in my opinion. But for those of us that bought it for capital appreciation, there was an old gold newsletter writer, probably one of the few people I ever saw successful year after year, whether the market went up or down in the US. And he had a slogan, and his slogan was, make the money, take the money.
Who was that?
And Bob Bishop,
Okay.
he hasn't been around in a while, Robert Bishop, but I talked to him at conferences all around the world for 20 some years. And I always remember him saying that, especially when it came to mining shares of this nature, because for some reason, I don't know why, actually, I probably do know why, especially when we get to mining shares, where I still believe people should be, uh, the party doesn't seem to last anywhere near as long on the upsides as the pain does to the downside.
Yeah, I totally agree.
So the bottom line there was that even though a little bit of profit taken here for gold is okay, the mining shares have just finally turned. I don't think they're in anywhere concerned about any substantial drop. In fact, they may even surprise us and hold up really well, even if there is a correction in gold. But I do think because there were people that we had that bought it for capital appreciation from 1,200, even at 1,600 just 2 years ago, taking some profit now, especially when you find most people here that I deal with don't have any reserves. They don't have anything for a rainy day. You know that there's a study in America that almost 60% of Americans don't have $1,000 saved for an emergency.
Yeah.
And this is what I want them to do now because they've been so heavily invested. We've been blessed with this gain. You have to also remember, Kerry, I'm a little bit greedy in that we also did, since we last talked, if you remember, I got so big into uranium when it was down there at 20.
Yeah.
And in late January, I took our profits there and plowed it into gold and mining shares and things of that nature. So I just think right now, especially if you're looking for much higher gold prices, it'd be very good if we do have a healthy consolidation.
Okay.
Because what happens when things get in parabolic phases, which we got into now, it's like a bottle rocket. It's right. Sometimes you ride a bottle rocket that goes off at 100 feet. Every once in a while, there's one that went off at 300 feet. You're really thrilled, but it does pop. So the
Right.
more we stay in a parabolic phase without a consolidation, the more concerned I come. And you know, the other thing about me that had always been said about me, in fact, the comment always be is, you know, Peter, you tend to be too early. You'll get into something and we could have waited longer. And my answer, and again, going back to a mentor in my early days who said, Peter, I'd rather be 2 years too early than a day too late.
100%. Yeah.
So my just whole thinking here now is suddenly in the last few days, the enthusiasm and everything to meet our financial media, by the way, I don't know how it is in Australia, but our financial media here, same thing, Main Street, Wall Street, they treat gold like kryptonite. They
Yeah.
hate it.
Hate it.
They did.
Same here.
Well,
Don't want to talk about it because they don't make a commission off it.
no, and you know what? It just goes against what they do make their living off financial assets, the sale of them. And the financial media lives off those big firms that sell us, so they're not about to talk about things that go against it. But in the last few days, they've been all talking about this. And I always know when they start to show up, you know, we're getting closer to the end of a move. Doesn't mean it's a top move, but just some healthy consolidation and correction. And if I'm wrong and it keeps going straight up, we still own a ton of it. It's not like we're getting out of it and all. But I just want you said earlier about, you know, being 40 years and not being educated. First of all, I'll take my experience on it over anything they could have told me in college or anything. Okay.
100%.
I mean, I know you need to go to college for some things, but the experience I learned, and one thing I've learned is there are bulls, there are bears, and there are pigs. The bulls and bears each have their days, but the pigs always, and I mean always, end up in the slaughterhouse. And the times that I didn't take profits when, you know, when I bought it at 1650, if you would have said to me, Kerry, on the life of your things that are most important to your wife, your daughter, if I told you, Peter, in 16 months or 18 months, it'd be 2350, would you sell? I would have told you back then, yes, yes. So what changed? You know, so I have to stick to those principles. And it's not how much, I give you a little secret, at least what I think is a secret I learned in the 40 years. It's not how much you make, it's how much you don't lose, which
Yeah.
is going to separate you from the winners versus the losers.
Yeah.
And that's just the somewhat cautionary, signal that I feel that we should take now. We'll see in a few weeks if it was correct or not. Wouldn't
Uh,
be the first time I was wrong or have to say like Fonzie couldn't, I was wrong.
You mentioned a moment ago, Peter, that you like resources and mining shares. Bit of a disconnect for a while there. In building the arc, are you looking at putting some of your capital into the resources sector at the moment, the shares?
Well, they were already in it, and through December, I was very wrong for the first time, Kerry, in my 40-year career. Not only was I on the wrong side of a bear market, I was deeply wrong because I owned a bunch of mining shares and we were pulling our hairs out. How is gold going up 100, 200, 300? And shares are going in the opposite direction.
Yeah.
And then we figured at the end of the year, we figured, oh, it's got to start. And then January started like the last year. And I said, my God, what am I wrong on? I mean, I literally lost confidence in myself. And then, of course, we've had a key reversal now. The recognition is it can't continue to go this way. Again, I don't follow the Australian market, but I think I can speak in generalities. Money worldwide has not gone into mining and exploration in the way that it used to go 20 or 30 years ago. So
Correct.
you have all these great politicians in various parts of the world, including, I believe, your country. Electrification is the future.
Oh, yes.
Everybody have an electric car, an electric this, an electric that, and this and that and that. While no one's saying to them, excuse me, sir, in order to have that, you have to have the metals that go into it. And by the way, we don't have the copper and the zinc and the other metals that you need to the levels that we had. And it's so much more difficult now to go mine in a lot of places in the world, Kerry. There's a lot of places that you just, 20 or 30 years ago, I managed funds and all, and in mining, you could have spent a globe. We could have been at a conference and we just go like this to the globe. And wherever we land, we go, yeah, we can go there.
Yeah.
Not anymore. Not anymore. A lot of social and political. Look at these mines in Panama and all in South America where governments are telling them either you're going to pay our royalty or you can go bye-bye. And so now you have a mining company, got to think about putting a couple of $1 billion into some, mine perhaps in Latin America or something where there's social unrest and all that type of stuff. It's going to take a lot higher copper price to see substantial money flow back into, because remember, the grades, I'm just taking copper, for example. The grades that we're seeing on the average mine now has dropped tremendously. So, it's getting more expensive to look for these things. So it's going to take a much higher price for that. And unlike past periods when economies slowed down, there was ample supply. We don't have that anymore in a lot of the base metals. So I think one of the great things that happened was, as bad as the market was, it washed out everybody and anybody that needed to be washed out. So there's not going to be a lot of resistance in this move up because most people who had to bailed.
Right.
And I give you another example that's happening in North America because it ties into Canada. I know Australia has some ties to Canada. Canadians are very upset for a lot of reasons. They have a lot of justifiable reasons to be upset. But one of the things they're concerned about is such little investment in recent years into its own country. And it's kicked up, and a lot of the pensions and all the people are talking about have not invested in Canada or went elsewhere. And the problem that you now have is, so a lot of these investment firms, whether they're in Canada or elsewhere, they all got into the technology and AI and all this stuff, and they shut or reduce their resource equity staff to,
Yep.
trim down. So there's
Yep.
an older guy like me with gray hair and no hair that's been around that they kept in the seat, but he's got little or no funds to work with. Money isn't piling into that sector. So a lot of research isn't out there. There's a discourse now. The younger people have things that they're looking at that when we were younger, we might have looked at gold. Now they're looking at cryptocurrencies and other things like that nature. And so the industry is not going to be able to turn on a dime and suddenly overnight meet all the needs, which is clear and obvious. And now it's been washed out. Shares have been brought down to levels relative to metal prices unheard of, unheard of. And so I feel much safer and more optimistic for capital appreciation now in the shares than I might in the metals themselves.
Interesting. All right. If we go that, we don't have a lot of time left, but you mentioned copper. I know last time we spoke about uranium, and you were right. You know, uranium was much hated back then and was at $20, and now it's getting up to the $100 mark. A lot of excitement around uranium. I understand it. It's a zero carbon emission energy source. Here in Australia, we've got a lot of uranium, but we don't want to use it down here. We send it all offshore, but that's a whole other conversation, Peter. Apart from copper, is copper your favorite pick in the metals, or are you across the board keen on all of them?
I still think you have gold is king. I think copper is going to run with it this time. I think copper is uh, something that some of the smartest people in the world, one of the smartest people in the mining industry, if you just look where he's gone, where he's not been successful, I don't know how you can even find much where he hasn't been successful. Robert Friedland, who really sees copper now as a key part. The Middle East sees it. So I think copper and gold. But I think, you can basically look at a lot of other base metals that, we're going to have, even the ones that have gotten beaten down, like lithium's now come back to a price, which I think you can look at. Nickel's been beaten down to the point where we're going to see, people start closing production. The way you solve lower prices is lower prices.
Yeah.
But I think if you sort yourself through 3 or 4 or 5 different ones, and I think the shares now from this point going forward, as much as the metals outperformed them the last 2 years, I think the shares are going to make up for time and outperform the metal prices themselves for at least the foreseeable future.
Well, that's a wonderful way for us. A very interesting conversation. So let's wrap it up, if you like, into a bow, Peter, and give our beautiful audience out there your advice on give them 3 things that you think they should be doing right now.
Well, like I just said, I think we have to recognize what the world tells us what we need and what our common sense sometimes we get overridden by it because we're worried about what other people think. But if we just think for ourselves and our media families and all, I think a less and more attitude is a good thing to try to approach here. I think things are going to get tougher. Governments are going to tax us more and give us less. And we're going to have to fend more for ourselves than maybe we were used to. So I think that's the first one. I think the second thing to recognize, and I can't speak for Australia advice, but here in America, 80% of money managers underperform an index fund. So 8 out of 10 times we would have been better off. Yeah, studies have shown it. We would have been better off in an index fund versus an individual money manager. I don't know what the statistics are in Australia, but
Probably pretty similar.
One of the other advices I have to people is don't think just because they have some fancy name with a couple of letters that they claim that things that's your certainty of success. Use common sense. Just approach people don't approach their investment concerns in the same way they probably would if they had a medical issue or a legal issue. But obviously, since finance is the single biggest reason for divorce, you might want to focus a little bit more on finances because obviously it plays a bigger role in life than some of us give it credit to. So I think that would be the second thing. And then the third thing is the crowd makes money for a part of the time. It misses the beginning and stays too late at the end. So if everybody and their mother has already been talking about something you're first thinking of going in and they've been talking about it for a while, you're probably too late.
Fantastic advice and so true. Something Rick Rulter speaks about as well. Be the contrarian, if you like. Peter, it has been an absolute pleasure to have you on again, and let's not leave it so long next time. We will stay in contact. I will watch with interest the gold price, but as Peter actually said, two of the things he likes, copper, gold, less is more, ladies and gentlemen, less is more. Start doing some budgeting. Budgeting is not a dirty word, but just be aware of where your hard-earned money is going. And so just another comment, the Australian Gold Conference will take place on the 26th to the 28th of August in Sydney at Crown Towers. We hope to see all of you there. Who knows what's going to happen? But as always, this is not financial advice, but be cautious of what you do with your hard-earned wealth. Peter Grandich, if they want to find you, what's your Twitter handle?
At Peter Grandich, I believe.
There we go. I'll put it down below as well. Please make sure you follow him and also download the book. It's on his website, petergrandich.com. Thanks very much for joining me today, and we'll see you again soon. Thanks, Peter.
Cheers, Kerry.